you do a large purchase, you're either going to save the money in a bank account, which they're going to benefit from, or you're going to borrow their money on a loan, which they're going to benefit from again, not you. Okay. You want to loan money out, like you're going to take money that you saved up in a bank account or borrowed from a bank, and you're going to loan it out to other people. They're going to benefit again. You want to invest, you're going to do something with the bank at some point. Wall Street and banks might as well be the same thing. When you put money in a sacred account, you put $1 in as a deposit, this dollar is going to grow forever for the rest of your life at a 3 to 5% annual return. Okay, it's tax-free. So it's also not only like, and I don't want to put out too many things here on this, but this is also like not only a great strategy, it's the safest place you could put your cash reserves. Like literally the safest. Okay, it can't be taxed. It's guaranteed against loss. It's guaranteed to grow. Okay, now the guarantee is only as good as the guarantor. Life insurance has never been taxed, has always made money, and has never lost money, at least the kind we're talking about, the sacred account, every single year for 170 years in a row since they started. Meaning in the Great Depression, they made money, they didn't pay taxes, they didn't lose. Okay, in 2020, they made money, they didn't pay taxes on policies, and they didn't lose. Right? Like this is something like, it's not like I could start a new product today and be like, oh, it's guaranteed, and I could advertise it, but we could still lose money in 2 years. You don't know because there's no track record, but when we're like, oh yeah, every single year for 170 years, it's managed to do all three of these things without missing a beat. Every year, not all the years except for when the times were rough. No, every single year. That's 3 generations of humans, 170 years. Like maybe even there's 4, there's younger people in there. That's a lot of time that happened where we have consistency. This is more consistent than the dollar. This is more consistent than the stock market. This is more consistent than most people's real estate portfolios, right? So making 3 to 5%, I put $1 in, I'm making 3 to 5% on this dollar. I can borrow 70 to 90% of this dollar from day one, still earn the 3 to 5. My cost to borrow is going to be 1 to 3% in interest that I'm going to pay on a policy loan, right? So there's my cost, but I'm still making the 3 to 5. Now I take this money I've borrowed and I can do things like pay off debts. Okay, if I have debt, I can pay off my debt and I can save the interest. I can make large purchases. Like I did with my car, my couch back here. I self-financed that couch with my life insurance policy. It was like 3 or 4 grand. And it's like, okay, I could pay cash or I could take a policy loan and make money on my couch, right? I would rather make money on my couch. That's kind of cool if you ask me. So large purchases, I did that with my Audi. I do that with as many things as I can possibly do. So I could pay off debt. I could make large purchases. I could loan it out. I could invest. Right? These are all things I could do with this now. And this is why I say this is foundational. If I'm in the phase of paying off debt, I should be using a sacred account. If I'm in the phase of saving up for a car or a house or whatever, I should be using a sacred account for that. If I'm in the phase of wanting passive income and I want to become a private lender, I should be using a sacred account for that. If I'm in the phase of investing and I want to start doing foreign currency trading or buying businesses or whatever, I should be using my sacred account for that. Guess what I also use mine for? I use mine for personal development. When I invest in myself, I expect that I'm going to have my income increase. So I take policy loans to fund that, right? And then I pay myself back on a loan schedule based on my increased income. It forces me to go make money, right? This is everything. Now, here's the other thing on this. If you don't do this, you're going to use an actual bank for all these things. You're going to use your bank, your actual bank for debt. They're going to make the money on the interest, not you. When you do a large purchase, you're either going to save the money in a bank account, which they're going to benefit from, or you're going to borrow their money on a loan, which they're going to benefit from again, not you. Okay. You want to loan money out, like you're going to take money that you saved up in a bank account or borrowed from a bank, and you're going to loan it out to other people. They're going to benefit again. You want to invest, you're going to do something with the bank at some point. Wall Street and banks might as well be the same thing. If you're wondering, what does Wealth Dynamics do? How can we actually help you? Number one, if you haven't gotten a copy of my book, Blueprint to Financial Freedom, grab one now. You can get that down in the comments in the video. You can get the link for that. And then finally, if you have a desire to start getting help walking through these different phases toward financial freedom, book a call with my team. Go to our website, set up a call. We're able to help out and answer questions. That's how we can help you. Thank you for watching. Like, share, subscribe. Make sure you turn notifications on, and I will talk to you guys on the next video.